Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So, gold enters a new era. It's entering a new era of zero interest rate and devaluing currencies. Today's higher gold price has not rewarded the miners so far, and a longer term price target of $2,100 may happen in 2021. Now, we always look at the shorter term price forecast for gold and silver, but what about the longer term? They're talking about $2,100 gold, so that would in turn put silver at a much higher place than it is now, especially if the gold to silver ratio lowers and silver outperforms gold. We could definitely be seeing much higher silver and gold prices. So I am curious where you think gold and silver could be in 2021. Remember, silver was $50 in 2011, and that was the same things that are happening during the economy right now with the recession, with everything, the credit crisis, and it's looking like we could see a repeating pattern. So anyways, the link to this article from Seeking Alpha will be in the description, so let's jump right into it. The record expansion of money printing by global central banks is boosting gold to a new higher level. Physical gold is a constant solid that is regarded as money throughout history, has been for over 6,000 years, right? Today, gold is valued in currencies. When the quantity of the overall currency suddenly grows at a rapid rate, they will all devalue relative to gold. Since gold is traded globally, it is best to treat gold as a global currency that retains value. It's like a preservation of wealth. It's like putting your money in a time capsule. To understand the current financial and economic crisis from a monetary viewpoint that includes gold, a good starting point is to review gold as money since 1900, which spanned the Great Depression and the two world wars. Back then, gold was only $20 as compared to $1,750 today, and the increase was solely due to the devaluation of the dollar over time. Depending on how the governments handle this pandemic, global financial markets can slide into depression levels again. Therefore, monitoring the moves of the central banks and governments is essential to adjust the investment moves accordingly. So, wow. This diagram above shows the latest quantitative easing activity from the Fed. The motive sounds to be just to reflate stocks and bond prices, but likely to benefit the banks as they have extra liquidity to deploy in making profits. Regardless, the unprecedented acceleration of money growth will undermine the value of the US dollar. $1,750 today, gold rises ahead, may be earlier targets. A longer-term price of $2,100 gold for gold may happen in 2021. So they're very bullish on this. So the above diagram illustrates a financial portfolio with gold as focus among the four major asset classes of currencies. Long-term bonds, stocks, and gold as represented the UUP, and the following charts, the main asset classes of fiat system and currencies, bonds, and stocks. This system may well work if these asset prices are not overvalued and the authorities limit money growth. But none of these wishes are true today as the opposites prevail. Fortunately, gold is a solid alternative and is accepted globally as Tier 1 asset. Miners also expand the flexibility of stock holdings. The performance of miners usually is tied to gold prices. These days, miners deserve to be under the spotlight when gold prices rise. Elemental rotation among the four major asset classes reflects the dynamic money flows within the global economy, or with a global closed system. Making profits are simplified if we can anticipate the relative direction of flows among asset classes so that we can position timely. Money flows are indicated by price momentum and movement. Secondary rotation means the same concept applies by expanding the number of assets by the dissimilar ETFs. So there's a lot going on, right? This is pretty confusing stuff, but it's basically explaining how the economy works, how if we are going to be using quantitative easing and we're going to be pumping all this money in, how it's going to actually be boosting gold prices and how it has in the past. So the above table outlines many of the reasons about the merits for gold investment. The future value of the US dollar is doubtful. with lower oil prices, the demand for the dollar may diminish over time, right? The dollar's lost 98% of its purchasing power. The dollar is going nowhere really fast. The Fed just expanded its balance sheet by 60% in 6 months as compared to the balance sheet over 100 years. The effects on USD depend on relative amount of money printing by other central banks, as they are all printing. Collectively, all currencies likely will devalue against gold. The globe is experiencing something drastic, a once-a-century event. Assets are subjected to deflation threats during times of economic stress. Except physical gold, its price generally will rise roughly proportionate to the global growth rate of fiat money, and it will preserve the purchasing power. Wow, talk about potential, right? The chart in this article has a starting date of 6/8/2015. The 12-month data input chart shows many of the rotating aspects of the four major asset classes, as money flow has preference of one asset class over another with different times. In general, gold paired with bonds and stocks paired with the dollar. So, the visual illustrates the liquidity crisis on 3/9/2020 very well. You can see right here. The shortage of the US dollar forced dumping of all financial assets, including stocks, bonds, and gold for 2 weeks. The crisis resulted with the coordinated efforts of the Treasury and the Fed to increase the balance sheet by a record amount, over 60% in 4 weeks. That magnitude of the increase cannot be overstated. The immediate rebound of asset prices flooding the new liquidity is self-evident. Gold can be the best long-term winner because the danger of the potential future is a dollar devaluation. So they're saying, when this happens, the rebound is going to be exponential, and who knows how extreme it can be. It could be a lot higher than $21. It could be a lot higher than $50 silver. Another way to view the data inputs is divide each major asset by the daily average of the four. The advantage to warp the input data set into four curves rotating in the horizontal manner. The strength and weakness of each asset become more apparent, so that its trend is easier to see against other asset classes. For example, UUP and then TLT become weaker lately, while gold and SPY are strong. So, this is showing a lot of, a lot of other things, but let's go into gold entering a new level. The gold market is global. To reflect upon the real price of gold, we need to multiply the value of the currency with gold. The strong US dollar since the trade war 2 years ago contributed to the higher gold than gold itself. Gold in most other major currencies broke records already, as the US is getting close to do the same. Miners are devalued. The miners are at the level which gold price was $1,570 in August last year. Today's higher gold price has not rewarded miners so far. Higher gold price promotes higher profitability for the miners. The coming earnings season will be much better than the last quarter because of the higher average price. The only concern may be disruption of production, which will be affected each miner differently. And that's, definitely, since the economy is in such a weird state, production can definitely be a little messy. So here's the conclusion. The global fiat system is in trouble, with the major asset classes facing tremendous challenges, namely the devaluation of currencies due to excessive money printing, the huge increase in budget deficits due to higher spending and lower tax receipt, and the reduction of earnings for stocks. Only gold is unaffected by the crisis. The future appears to be rocky for all financial markets other than gold, and its asset of choice with miners if history is any guide. So, that's definitely showing the reality that we live in, ladies and gentlemen, right? The dollar is not going to be existing for too much longer. It could be within our lifetime. Definitely, that's not something that's out there with the tinfoil hat. Our financial system is crashing, and I like how they use the word alternative, because gold and silver is the only alternative. There is no solution. We've dug ourselves too deep in the ground to dig ourselves out, or to climb ourselves out, and something has to change. And the only thing we can do as investors is preserve our wealth against inflation rates rising, preserve our wealth against the dollar devaluing itself. So anyways, I'm gonna wrap this video up here. If you did enjoy this article, if you did enjoy this video, make sure to smash the like button. I'm curious to hear what you think about this. Where do you think all this goes? I know this video was a little complex. It definitely broke down a lot of stuff. There's a lot of information, but I am curious what your overall input and insight is on this. Thank you so much for tuning in. Make sure to smash the like button. Make sure you subscribe if you're new, especially if you're new, because I post daily videos. If you want the newest, latest, freshest information in the world of precious metals, I am your guy. This is your channel. Thanks so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.